Good morning, everybody. I have some good news. I just passed a prop firm eval. They gave me $100,000 of simulated capital, and they told me I have to make 6 grand on it. And I took it kind of slow because I kind of was just using this account to practice, and I'm getting fucking good. Part of my French, but what I'm gonna do is instead of paying for the actual account, which would be like $200 to control $100,000. And then the rules are that once I make over $106,000 with that real money, I can keep anything after that, so long as I have out of 8 days, 5 profitable days. And but instead of doing that, what I'm going to do is just reset this account for $40, give myself another month, and see if I can do it again. And if I could do it 3 times in a row, is when I will go to 100 and I'll pay for the $100,000 to control that equity. But until then, I'm just practicing. In my actual account, my Weeble account we're up like $100 this year, and in Robinhood we're up like $4, and that's just trading options. So what I do is I sit in front of my computer and I trade the futures, simulated futures on a prop firm eval, and I get a bunch of experience because the tiny movements mimic the big movements overall. So once I step into market open, which is actually about to happen in 3 minutes, I actually have a lot of experience, a lot of skill. So I know I haven't posted in a while. Don't think I gave up. I'm still working hard at this every single day, pulling myself out of poverty is the way I think of it. And last year I lost like 3,500. It was at like 42, but right before December ended, I had a couple good trades. And this year I put $50 in one account, $70 in another, and both accounts are one's at like $300 and the other's at like 100, something like that. And that's just trading credit spreads using a mean reversion technique strategy that I created using a fixed volume analysis profile. Let me show you. So basically I come into this chart and I can go into, let's give it the 1 hour chart. What I do is I zoom out and I look for 30 days. So I use this measurement tool. That right there is 26 days. So I apply that same range to this, boom. And basically it gives me a white line, says this is where most trading has occurred, most volume in trading has occurred at this price level. This is what's called the point of control. So what I did was I learned some mathematics, what's called a standard deviation. Basically it's the equation for thermodynamics and thermal expansion. So basically any time that we get one standard deviation away from the point of control is when I open a credit spread, which benefits from the stock not being where it's at. So say it gets one standard deviation, I open the credit spread, and then once price goes back to the point of control, that credit spread decays and I collect the premium from it. And if price goes beyond it, which sometimes, not every strategy is foolproof, but sometimes it's not going to work out. And that's why whenever I open the credit spreads, I've been selling them at a 50% loss, but I've been letting them decay to 100%. So I'm using a 1 to 2 risk to reward, and I have a pretty high accuracy as of right now. All right, so we're about to see the market open together. We'll see what happens to the NASDAQ ETF. I'm expecting a bullish open because the point of control is above us. Market open has the highest volume. The New York session does. MACDs just went positive right here. 15-minute graph is always the one that tells you what's up. And I was right. If I had taken a call at open, it would have cost me let's see, I use 0 DTE, so it would have cost me at open $180. That contract's worth $200 right now. Yep, and that's where I'm at. I'm a year and 2 months into this journey, and I'm giving myself 2, maybe 3 years in total. And if I'm not profitable by then I know when to quit. But at least it's not about failing. It's about having the bravery to try. And if I do succeed, then hey, no more money problems. All right, everybody, peace.